It's 2020, and there are a number of people either retired or saving for a deposit on a house that have a lot of cash in their bank account. And these people are quite upset because the interest rates are so low. Last year on a term deposit, for example, something like 2.85% was the rate, and this year it's 1.75%. At the same time in 2019, the top 300 companies went up over 20%, the top 300 Australian companies. And so people are thinking, well, do we get out of our bank accounts and put it into the Australian stock market, or where do we put our money? On this channel, we won't give recommendations about what to do with your money. We will simply educate you by looking at some of the best investors in the world and seeing exactly what they're up to and what they're thinking. And we'll leave it to you if you'd like to see a financial advisor for your circumstances, or if you'd like to just see someone who can give you general investment help, I can help you, put you in touch with someone there too. Now let's start with Ray Dalio. He was the founder of Bridgewater Associates. It's the largest hedge fund in the world. And let's see what he has to say about the current market environment.
We had David Tepper had texted into the show on Friday and suggested right now that you have to be in the market full on. And so the question is whether everybody jumps on the train, everybody gets in full on, and then the problem arises that you're talking about.
Most likely.
But then the question is when do you jump off the train?
But also the question is, what do you jump into when you jump off the train? And the issue is you can't jump into cash. Cash is trash, okay? Cash is that they're going to, because they're going to print money. What do? You get out, okay? So cash is not going to be
So what
good.
do you do?
So what you have to do is you have to have a well-diversified portfolio. And first of all, you have to be global, and you have to have balance. And I think, I don't want to grab, well, the headline's going to be, again, anyway, is I think that you have to have a certain amount of gold in your portfolio, or you have to have something that's hard. There are three monetary systems that happen. The first is, in the old days, it had intrinsic value. You'd carry around gold coins. Then we come up with the idea of banks or even central banks. And what they do is they create certificates, we call notes, that are claims on those things. And we print many more certificates than there is money in the bank. And then that's a linked system. And so we did that, and we broke that in 1971. Then you have a fiat monetary system, which means that you can print whatever amount of money you want. And you can put that, and that's what governments do. So we're in that part of the cycle, bigger picture, so that when you think about things, the depreciation of the exchange rate and the printing of money, I think over the next few years is going to be the biggest.
Ray Dalio saying cash is trash. Now that's a hard concept for us to think about when we think cash is safe. But what he's saying is that he's expecting there to be money printing in the future in the US if there's a problem or a downturn. And so he expects that if you have a lot of US dollars, that then you lose value. Your US dollars are less powerful and less valuable. So he doesn't like the idea of US dollars. He's calling it trash. And he's saying it's better to be well diversified, or to go global, or to even have some gold potentially. Now that's Ray. Let's have a look at Howard Marks. He is the founder of Oak Tree Capital, which is a big credit fund in the US. Let's see what Howard has to say about the current environment.
You say, Howard, that one of your strengths as an investor is knowing how to think about the future probabilistically, effectively evaluating the odds against available information. Howard, I want you to think probabilistically. We've started a new year. We've started a new decade. Does now strike you as a good time to be investing?
I would say probabilistically it is not, because if you look, the market's been up for 11 years. It's quadrupled off the low. We're in the longest bull market, the longest expansion in history. Profits are not rising. Stock prices are. It's what we call a liquidity-driven rally. That means it comes from people having a lot of money to spend. If you put those factors together, it doesn't mean that the market's going to go down tomorrow, but it does mean that the odds are not, in my opinion, in the investor's favor.
Is that to say that now is the time, Howard, to be a contrarian? Because as we both know, the economy is growing at a reasonable clip. Forecasters say the odds of a recession in 2020 have declined. Stocks, as we witnessed last week, brushed off, right, the threat of Iranian hostilities and surged to a new record. And of course, high yield spreads keep edging closer and closer to a new post-crisis low.
Right. Yes, well, the way I would phrase it, Eric, is that this is a time to have less risk than you did 3 or 5 years ago. You know, 3 or 5 years ago, we were here, and now we're here. All things being equal, if we're here, we should have less risk than here. And I don't know whether we're going to go over the cliff tomorrow or continue straight up to the sky, but the odds are less in the investor's favor, in my opinion, than they were 3 or 5 years ago.
Howard Marks from Oak Tree Capital, he talks in probabilities. He does this because he knows that no one knows exactly when things are going to go up or down or sideways, and so everything's a probability. He says that the odds are less in the investor's favor now because the most previous history, things have gone higher. Now again, he also says that he doesn't know, things could even go even higher, but he's just talking from a probabilistically point of view and his own opinion. Really, he's saying it's best probably to be a bit more defensive now. What defensive means, he doesn't go into. However, if you think of Warren Buffett last year, Warren Buffett being a very famous investor in the US as well, he had $128 billion in cash in his portfolio. Now that makes up around 15% of his total portfolio. So Warren, unlike Ray Dalio, feels like cash is quite important to cash around. And the reason is if the market was to fall down, that Warren would have then the cash to be able to buy things at that point. So there are different opinions among some of the best investors in the world, and if they're having a hard time understanding what's going on, we're definitely going to be having a hard time understanding what's going on. So you think to yourself, what do you think is going to happen in 2020? Maybe what's going to happen up until 2025 in a 5-year period, and will it be different? Make sure you're feeling comfortable with where you're at, and if you would like some advice, I can put you in touch with a low-cost provider of advice, about $200 to get some simple advice, or go see a financial advisor and get them to look at your full situation and help you in that way. This channel is simply educational. We look at what's happening in the world, break it down, and put it out there for you guys to understand. If you'd like more information, have a look at the interviews. I'll put the full interviews in the comments below, and I will see you in the next video.